Hello everyone, welcome to This Week in the Markets. Information contained in this video is intended to be general advice only and should not be relied upon as financial product advice. Furthermore, the advice has been prepared without taking into account your objectives, financial situation, or particular needs. So you should, before acting on the advice, if you choose to act, consider the appropriateness of the advice having regard to your objectives, financial situation, and needs. Welcome to This Week in the Markets. Today we will cover events in Europe, FOMC meetings, and China manufacturing. Turmoil in the markets this week as Europe braces for a deposit levy in Cyprus, in what would essentially derail the nation's bailout and spark a new round of debt talks. Cypriot President Nikos Anastasiadis has agreed to raise 5.8 billion euros by taking deposits off every bank account in Cyprus. Now, depositors who kept their account for 2 years will receive securities linked to future revenues from the country's natural gas reserves. Exactly as it stands now, 6.7% of all deposits up to 100,000 euros and 9.9% above that will be taxed. This will reduce the bailout package to 10 billion euros, down from 17 billion euros. Now, the Cypriot economy itself is worth 18 billion euros. Following this, the Cypriot parliament has rejected the levy on bank deposits overwhelmingly, with a 36-0 vote against the proposal, leaving the bailout plan in absolute disarray. The ECB has also effectively turned its back on the nation by stating that the bank is prepared to cut off funding to Cyprus and let the nation succumb to financial meltdown if it has to. According to the ECB, banks must remain solvent in order to receive ECB funds, and without the bank levy aid, banks will be insolvent. In other words, not enough capital to even stay open. Now, the ECB states that it has enough firepower to prevent contagion around the region. In an interesting turn of development, it just so turns out that Russian deposits account for 25% of all money in Cypriot banks. With the EU turning their back on Cyprus, Russia may have to bail the little guy out. But what's in it for Russia? An unproven natural gas reserve worth 380 billion. That's what. Now, several risks pose the markets throughout this event. Putting deposits at risk in Cyprus might induce bank runs in other areas where people may be fearful of frozen accounts and levies. The fear could induce chaos into already fragile European banking systems, and money could flow into gold as a storage of wealth if banks are not to be trusted. The uncertainty could raise fear amongst bondholders as well, and yields on European bonds could start moving higher again into unsustainable levels. In the wake of the news, the S&P 500 opened 10 points lower, but since then has staged a recovery eventually. The dollar-yen was also cruising at 96 recently, but opened at 94. Since then, it has also staged a recovery. Markets opened lower on the back of the news, but have all pretty much recovered, shrugging Cyprus off with disdain. Federal Reserve Chairman Ben Bernanke kept the status quo at the Fed as it maintains its asset purchasing program, currently at $85 billion a month. Bernanke cited that there has been improvement in the economy, but have to make sure that it's not only temporary. Bernanke maintained that a variable pace may be more sensible as the outlook changes over time. The Fed's asset purchasing plan currently involves $40 billion worth of mortgage-backed securities and $45 billion worth of Treasury securities. Bernanke's term at the Fed was also in question. However, there were no concrete decisions regarding the continuation of his term. Meanwhile, Obama has touched down in his very first trip to Israel as president. Following the Fed decision, the S&P 500 reached a high of 1561 but closed at 1555. In commodity markets, expansion of China's manufacturing may drive copper prices upwards. The Purchasing Managers Index came in at 51.7 in March, up from the 50.4 recorded in February. The recent fall in copper prices can be attributed to a resurgent US dollar and whispers of contractions out of China. Because of this, copper inventories have been higher for the time being. Furthermore, manufacturing activity outside the US has been lagging, reducing the demand for copper. Due to these reasons, the metal may be responding to supply and demand fundamentals more than anything else. Going forward, the demand and expansion out of China may drive a bullish trend for the base metal. Technically, there is near-term and medium-term support at 3.4 and 3.47. Meanwhile, in Australia, Julia Gillard has called for a ballot to decide the leader of the Labour Party. This should be fun. That brings us to the end of this week's presentation. Good luck and happy trading.